In previous videos, we introduced the core 4 principles that form the foundation of the chart whisperer method of trading. In this video, we're going to wrap everything up and explain how they all work together. At first glance, price movement can look confusing. The moves may seem random, but there are some basic chart behaviors that happen again and again. Using the core 4 principles, the chart becomes much easier to understand. The first thing we look at is structure. We view structure by using candlesticks. They allow us to see levels on the chart where price has previously touched and then changed direction. When price falls but then repeatedly bounces back up after reaching a certain level, that area is called support. When price stops rising and turns downward at a certain level, that area is called resistance. These turning points begin to stand out over time, and they form the basic framework that guides everything else you will look at on the chart. The next one of the core 4 is participation, or trading volume. Participation is viewed by using the volume indicator, which represents how many shares are being traded during a given period. This information becomes especially important as price approaches support and resistance levels. When price moves into a support or resistance level and volume begins to increase, it means more traders are getting involved, adding strength to the price move. However, price can also move with little to almost no volume. Without volume or participation, price movement becomes difficult to read and less reliable. That is why price movement with more activity matter more than moves with very little participation. Next is momentum. Momentum shows the strength of the price move as it occurs. The tool we use to help see it more clearly is called the MACD indicator. MACD stands for Moving Average Convergence Divergence. The MACD indicator does not tell you what to do. It simply helps show how strong or weak a move is at that moment. It can help you see when momentum is building and when it may be starting to slow down. Strong moves usually continue with steady price movement, while weakening moves often begin losing momentum before it becomes obvious just by looking at the chart. The final core 4 principle is price location. This means understanding where the current price is compared to the market's average value during the day. We use the VWAP indicator to help us see whether price is trading near that average value or moving too far away from it. VWAP stands for Volume Weighted Average Price. When price is close to VWAP, it is trading near the average price. When price moves far above or far below VWAP, it is moving farther away from that average. Watching price together with VWAP can help you recognize when price may be overextended or trading at a discount compared to its average value. When you combine all core 4 principles, the chart becomes much easier to understand. You are no longer just guessing. You are observing where price has reacted before, how much participation is behind the move, how strong the momentum is, and where price is compared to its average value. That is how you begin to better understand what the chart is actually showing you. You are no longer guessing. You are looking at where price has turned before, how many shares are being traded, how strong the move is, and where price is compared to its average. When the core 4 principles do not match, the picture becomes less clear. For example, price may be moving towards an important support or resistance level, but volume or participation may be low. So the move begins to fade and slow down. When that happens, it's usually best to do nothing. Do not force a trade or try to look for a sign that is not clearly there. It is usually better to wait until the move becomes clear. Using the core 4 changes how you see the chart. Instead of feeling rushed or unsure, you begin to slow down and think more clearly. It becomes less about trying to guess what will happen next and more about gathering and confirming information to help you decide when to act and when it is better to wait. As you learn to look at structure, participation, momentum, and location together, your decisions feel less forced and more based on what you can actually see. This helps you stay calm, stay patient, and stay in control of how much of your money is at risk. This is where things start to change. That is the shift. That is the chart whisperer way.